Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 8th, 2017. So first of all, Elite membership list is forming. Sign up for a discounted membership on the website at MasterCharts Trading. Next Monday or the Monday afterwards is the most likely go live date. S&P 500 and QQQ form a triangle consolidation. On the weekly charts, we'll look at that. IWM and XLF are still lagging. I meant to say XLU, utilities, and healthcare break to new highs. There's a bullish divergence in consumer staples. We'll look at that. Emerging markets are breaking out to fresh highs, and they're being helped by Brazil. Hedged versus unhedged European ETFs, we'll look at that. We'll look at junk bonds that could be forming a double top, and TLT is again at fresh 2017 highs. We'll look at the dollar at a little bit more detail, and we'll mark the first and second bounce areas for it. Gold is breaking out to fresh highs and actually set 52-week highs. We'll look at GDX as well. And West Texas versus Brent, kind of hard to see where this is going, and while natural gas is continuing with its sideways chop. Okay, let's look at S&P 500 ETF SPY. First of all, please hit the like button. It's in the bottom, kind of down there. I'm keeping this advertisement free, so basically I'm working for free, and if you hit the like button, it will make me feel better, and I might provide more interesting material, so please hit the like button. S&P 500 on a daily time frame. This is a bullish chart for multiple reasons. Number one, that this is all-time high. Number two, these are advanced decline lines. They are also hitting fresh highs. So it's pretty unequivocal that this is a bullish chart. Basically, we had a pretty classic pattern here. We had a hammer-like candlestick, a gap, and a surge. So this combination of two candlesticks pretty much confirmed that we have bottomed here in mid-August, and now are moving towards fresh highs. On a weekly time frame, notice that we have a inside week. This week's range is entirely within previous week's range, so this could be thought as a triangle consolidation. I marked a bunch of them here, and pretty much all of them except for the one in June was resolved to the upside. The one in June was basically flat, and then the second one in June resolved to the upside. So this is a bullish chart, and triangle consolidations are bullish continuation patterns. So we could expect a breakout to fresh highs. Alternative scenario is we don't, and we could break down below June lows and retest April lows. That is also a possibility, yes. So we have to keep our minds open and not get married to one possibility. Future is written in pencil. Here's QQQ. This week it actually set fresh all-time high. Also, advanced decline lines are at fresh all-time highs. So once again, this is a bullish chart. Here's QQQ on the weekly time frame. Same thing, we have a inside week, which could be thought as a triangle consolidation. This one is a little bit even more obvious. So I think a breakout to the upside could, well, pretty much will guarantee fresh highs. Again, notice that I continue to point out that in a bullish instrument like QQQ, bearish patterns, for example, here's bearish engulfing patterns, several red candles. Don't amount to much, and usually in a bull market the resolutions are to the upside. Here's IWM, Russell 2000. I still think this is a bullish chart. These are fresh all-time, these are all-time highs here back in July. So if we make a lower low and continue lower and break below August lows, then we'll start worrying about it, because by then most likely the 50-day moving average will cross below the 200. So some of the trend following systems will start shorting IWM. I still think we're bullish for IWM, and actually this indicator here, this overlays, this green line, blue line, light blue line, and yellow line, these are going to be part of the elite service, and I will, if you sign up with MasterCharts Trading, I will share this indicator with you, or this overlay. So this is quite a useful indicator, I thought. So let's look at IWM. So first of all, these are all-time highs, and this is a normal pullback. With this indicator, what I usually do is I basically buy at the green line, and I would put my stop down below at the light light blue line, or even at the yellow line. So a relatively wide stop. So by extension, you will have a smaller positions. But here what I see is basically still a very much a bullish instrument. If we were breaking down below, let's say 119, let's look at this chart here and see where 119 is. You can't even see it on this chart. We have to zoom out, significantly further. So where is 119? So 119 is like way down here. So if we get to 119 on IWM, then I would start worrying about a bear market. But for now, I think we're still firmly in a bull market. We're simply underperforming. Same goes for XLF. I mean, these are all-time highs. So same thing, bonds have been moving higher, XLF has been moving lower, because there are quite a bit of banks in this ETF, and banks make their money by lending out at higher rates versus what they borrow at. So when the bonds move higher, interest rates move lower. So what I see on this chart is I see a bit of a relative weakness. Notice that SCTR for this XLF actually came down to 9. So relatively speaking, this is a weak chart, but not bearish. So we can look at it again through the elite indicator, and once again, I wouldn't start contemplating a bear market until we probably break 20 bucks, and that is still far off. The opposite is true. Here's XLV. This is healthcare. I pointed out this potential cup and handle right there, cup handle or something like that, inverted head and shoulders maybe. Looks like we're breaking out. You can look at it through the elite indicator again, and notice that we bounced exactly at the green line. XLU, well, around the green line, XLU, same thing. We have a position that we opened at MasterCharts Trading, and we are at second target, I believe, already. XLU is bullish, and this sell-off was an opportunity to buy. Here's XLP, consumer staples. All-time highs back in June. Relatively strong selling, and so far we're not able to regain the all-time highs. But notice what happened here. We have advanced decline line and advanced decline volume line have both set all-time highs. Notice where? Before the index actually set fresh highs. So this is a bullish divergence, and I think that since we're setting new highs for advanced decline lines, I think the index will follow suit and move higher as well. On the emerging markets, also had hit multi-year highs, so pretty strong move here for EM. Pretty straightforward bullish chart as well. Let's look at it from this point of view. So a couple of opportunities. Opportunity here on the 8th of August, and another opportunity right here on May 18th. So very useful, I thought, indicator. Again, I can share it with you once you sign up. Here's EWZ. Now this one I just completely, kind of blew my mind, sort of, because this was an enormous drop, and apparently this was a one-off kind of event, and then we made a fresh high, multi-year high. So now I'm thinking that EWZ, which is Brazil, is bullish, and I would be looking to buy it. And let's look where I would be looking to buy it. I guess around $40.56. Hedged equity versus non-hedged equity. So this is Europe hedged equity, and as you may have heard, the dollar has been under severe pressure. The effects of dollar are hedged out in this particular ETF, so it's been actually moving lower versus same basic composition, Vanguard Euro ETF. This is an unhedged ETF, and notice has been moving higher. So it's sometimes kind of difficult to predict which ETF to use, the hedged equity or the unhedged equity. In this particular case, the unhedged equity was definitely a winner. So to summarize, stocks are bullish. Pretty much most of the sector funds and most of the foreign ETFs are also bullish. There are some pockets of weakness, of course, but overall, I think the market, the stock market is bullish, and I would continue to buy and look for buying opportunities and not look for shorting opportunities. Okay, let's move on to the bond universe. Here's junk bonds on a daily time frame. All-time highs back in beginning of August, a drop which turned out to be a buying opportunity, and now we're approaching all-time highs, but it's possible that we are rolling over here. If we indeed do roll over here, then maybe this is going to be a goofy looking head and shoulders. If it is indeed a goofy looking head and shoulders, then we could expect a move once the head and shoulder is broken, so that's about 2%. We could expect a move for about 2%, so like there, like 35.60 or so. None of this has happened yet, and we may just bottom here and continue higher. On the weekly time frame, I still don't see too much top-end action. I mean, it's still possible that this shooting star from a couple of weeks ago with a next week's follow-through is indeed a V-top, possibly, but also it's possible that we just trade sideways and then make a fresh high. TLT also has been steadily moving higher, and these are bonds, Treasury Bond Fund. In fact, TLT has set a fresh 2017 high here. We are long also at MasterCharts Trading TLT. So very big move here from late 2016. I wanted to point out a couple of bearish patterns here. So here's bearish engulfing on the weekly time frame, no less. And this is a confirmed bearish engulfing. Notice that it didn't amount to much, and it turned around, and around the same area a shooting star was formed. And I was like, maybe we're forming resistance where? We're forming resistance at a broken support. But notice that this week we actually closed above the shooting star and the bearish engulfing. So it looks like we have negated both of those patterns so far and made a fresh 2017 high. Where is this going? This is showing some rotation of money into bonds. How much should we worry about it as opposed to stock market dropping sometime in the future? It is obviously difficult to say, but owning a little bit of bonds, I think in any portfolio would be helpful, and maybe add a little bit of a stability, especially if we're going to see a drop in the equity indices. Okay, let's move on to Forex Universe. This is US dollar on a daily time frame. So this is a multi-year lows here on Friday. We had a couple of support breaks, and so I've marked here in light red and a little bit darker red here areas of where a potential bounce might materialize. Now, why did I choose those particular areas? So basically here in the 92, 93, 94 area, there's a lot of things that are happening. So you can say that a bounce would make sense here into this area. The same goes here. Basically, you had a broken support, so it would make sense to retest this broken support. Now, I plugged the same thing. This is DXY into my indicator here. And I got basically those numbers, 93.16, 95.81. And these are the areas that I marked on the chart. So this indicator also could be used to short stocks and to short indices or whatever you can use. You can pretty much use it either way. On the weekly time frame, we see a close below 2016 lows. This kind of looks bad because if this is indeed a valid breakdown, we could see a move lower of about another 11% from here, and another 11% would put us significantly lower. But will this happen immediately? Probably not. Most likely we'll see a bounce, maybe a small bounce, and then another leg lower. Alternative scenarios, we don't see a leg lower, we actually bounce and continue higher. Anything is possible. We have to keep our minds open. But I think that now that we have closed below 2016 lows, I think this looks really quite bad actually for the dollar. And when we get to gold, by extension, this is looking great for the gold. So British pound versus US dollar. It appears that we have broken out and are now bullish. In other words, we have reversed from a bear market into a bull market. So let's plug it into the indicator, and here's that breakout I'm referring to just a few days ago. So I think if I was trading British pound, I would be probably buying it. I don't trade currencies. Here's euro versus US dollar, the daily time frame again. On the weekly time frame rather. Again, we have a close above resistance here. just a few weeks ago. Small retest of resistance, support, resistance turning support, and then a fresh push to fresh 52-week high. So this is looking bullish to me. And again, if I was trading euro, I don't. This is not a real position. It's paper trading. I would be buying as early as 1.17987 and possibly at about 1.14352. So again, if you sign up, you'll get this indicator for free. Okay, let's move on to gold. Gold, I think, is bullish. It became, in my opinion, bullish in March 2016. I have a kind of like a model for gold, called Gold Breadth Index. Gold Breadth Index became bearish back here in 2012, year 2012. So all of this possible breakouts basically were short, counter trend rallies, and I would have shorted them all. In fact, I was shorting some of them because I was already trading them back here. And now that we have a breakout, in this indicator, this is a market breadth indicator, so it includes gold miners market breadth figures in it. Notice that we have had a relatively deep correction here in 2016, beginning of 2017, but then we rallied, and now we actually are at +4, so this is as high as it goes. And these are 52-week highs for gold here. So for me, it would make more sense to be buying gold, not shorting it. So here's that breakout in September. Here's that same breakout on the indicator scale, on this indicator right there. This are gold futures. There's the breakout right there, and we will again, we have been basically buying gold at MasterCharts Trading, but I think we will continue, and we will continue to be buying gold for an foreseeable future. Here's GLD on a daily time frame. There was a lot of resistance that was built up by the support break, attempted rally, another attempted rally, and finally this resistance was overcome by a breakout, recent breakout. So here's gold on a weekly time frame. These are 52-week highs set this week, above the November highs of last year. Big deal, I think. Important. GDX is dragging its feet a little bit, and it came up to an important resistance level at around 2550. Good things on this chart. We have a bullish cross, 50 going over 200. Here's the gold breadth index at 4. This is the maximum it will go to. Advanced decline lines are moving higher and are confirming this breakout. And additionally, we have new highs expanding within the index. So overall, GDX is painting a bullish picture. Here's that same GDX on a weekly time frame. Here's that same resistance at around 25.80, 26 bucks. Here what I wanted to point out is back in February 2016, notice that this StockCharts technical rank, this line here, became very, basically became over 90% here, very high. And then afterwards we had a enormous, very strong move higher of 85% from here, from February till August 2016. Now we just became we came up to the 90s for the stock shares technical rank. In other words, GDX is now outperforming quite a bit of other ETFs in the ETFs world. So if history is in any indicator, we could see a substantial move higher from here, and hopefully we will take out the highs from August of 2016. But I think before we get there, we need to take out this resistance first at 2580. Finally, here is GDX on a daily time frame with all of my proprietary indicators on it. Gold breadth index at 4, percentage of stocks on the buy signal, basically a very bullish signal here, 100%, and now it won't be bearish until we hit 0, basically. Raw data, percentage of uptrend, percentage of stocks within the index on an uptrend improved further, now at 75. And we're not even that overbought yet. Here we had somewhat an overbought condition back in April, and then we had a collapse. We're not even that overbought yet, so we could maybe move sideways and then have a breakout above previous highs. Okay, let's move on to West Texas Intermediate, light crude oil. So my personal opinion about West Texas Intermediate, about crude oil, is that we're in a bear market for it. We had a very strong counter trend move, I think, to $50 here, then a move lower, another move higher. So on Friday here, we had a very big red candlestick, and this is a clearly bearish candlestick. What I'm looking for is a little bit more follow through to the downside before I open a short. I was also looking at Brent oil and noticed that Brent actually broke above August highs here versus West Texas, set the August highs and then kind of moved lower. So Brent is looking stronger than West Texas. So I plugged it into my indicator. Here it is, UK oil. It's possible that we will break out above 55 here, in which case my bearish case could come under scrutiny. But for now, I think I am still looking to short oil, US oil, and notice where it bounced exactly at this blue line. So I'm probably going to be looking to short it sometime soon. Finally, natural gas on a daily time frame here. Lots of choppy action, lots of, oh my god, what a mess here. And it still continues, so difficult to see where this is going. My money is a little bit more bullish, more on the bullish side than on the bearish side. But if we come down here to $22.60, I think we can collapse from here, especially if we break below November, December lows of last year. All right, that's it for this week's recap. Again, hit the like button. If you have any comments, do share them. And of course, if you have any of the social networking account, please share this video with others. And consider signing up at MasterCharts Trading. We have a 4-week free trial, and you also get this free indicator. All right, thanks for watching, and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders. because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.